We now come to a very special moment in today's summit, the launch of a thought-provoking industry report on embedded supply chain finance presented by the Digital Fifth in partnership with Finisart. This report captures critical insights into how supply chain-led data, anchor ecosystems, and digital public infrastructure are reshaping MSME credit delivery in India. It highlights the shift from traditional leading models to embedded, contextual, and real-time access to working capital, and outlines what this means for lenders, platforms, and ecosystem participating going forward. Presenting this report are Mr. Sriram Kanuri, co-founder and CEO, and Mr. Parag Jain, co-founder and CTO of Finisart, along with Mr. Singh Jaini, founder and CEO of the Digital Fifth. May I welcome Mr. Amit Goyal, Head of Supply Chain Finance, ICICI Bank, Structured Trade Finance. A huge round of applause. Mr. Hitesh Sachdev, Head of Investments and Startup Engagement, ICICI Bank. Vikas Arora, President, Supply Chain, Finance and Commercial Finance, Sriram Finance. Let's make some noise and give a huge round of applause for them all together.
It has been done so tightly, somebody's thinking it's packed for life. So you will see us attempting to open it, right? Let's try. Yeah, he's one. So this report is the first time, yeah, maybe, okay, not used to it. Thank you, thank you. Yeah, thank you, sir. Thank you, sir. Thank you, sir.
Congratulations.
Thank you.
Sure. Thank you so much. Yes.
Thank you, sir. Thank you. Thank you, thank you. So we can stay back, yeah? Yeah. So I think this is my honest answer, again, directly brutal. I did not know the capabilities which can exist in ERP-led supply chain till I met Sriram and Parag. Okay, I did not know. I was only hallucinating that somebody will integrate, somebody will build something, somebody will do it. And I met a guy or a team which was doing it without knowing that they're doing it, okay? Sometimes when somebody is so humble, you really don't understand what they're doing, and they were doing magic, right? So I think I learned a lot from what they have done. They are direct, simple, and easy guys to work with. I think sometimes you have to show some might as well, right? So I think Finisart, as such, has done a lot of work in the market, and we learned around that. And again, this report is not on Finisart at all. Not at all. This is about saying that supply chain finance is changing, and we need to ensure that it grows to the next level. Supply chain finance, what it does. How many of you are MSMEs here? Any MSME here? A small business? Okay. All of you are in fintech and bank, so fintech guys are also MSMEs in sense. Pehla paisa nahi milta to. Okay. So the key part is, and when you are in supply chain finance, you get credit. MSMEs get credit, and you heard in the morning sessions at maybe absurd rate. For example, I did not get a credit card at all. I had to pay 20 lakhs as deposit to get 16 lakhs as credit, okay? Credit card, I don't get it, right? Because nobody likes MSMEs. That's a fair fact, because you don't have understanding of the customer. What this report is all about is what you can get those insights in, and how do you reduce the rate of credit, right? Because rate of credit is a big issue. Can you reduce it? And that's substantial work which is happening in the market, right? So we'll talk through it. I think Sriram, thank you for doing it. Parag, thank you for doing it. And I think the team which did it, I think you guys should have been there. I don't know why you were there. I was just lost. So I think Jay and Dipanshu, they did a fab job, guys. Super stuff. Maybe dikh to jao yaar, kam se kam. Itne hide mat karo. Amazing stuff. Amazing stuff. These are the guys who would have spent days and nights building it out. Normally, कोई report बनाते हो आप तो उसको data मिल जाता है. This is a report which has no data. There's no data available in the market around what supply chain finance can do, what segments are, factory में क्या हो रहा है, forwarding में क्या हो रहा है, क्या हो रहा है market में पता नहीं लगता, right? Too many nuances. So that's something, and maybe a quick talk on what Finisar does. Again, normally these sessions are done by the founders themselves. So humble that they're asking, aap bhi bol do, right? So I'm doing it right now for them, right? So just look at it. They have done a 142,000 crores of throughput on an annual basis, right? It is bigger than what trades entities do individually, right? One single platform which is able to do it. Look at the amount of transaction, 20 lakh crores of transaction done on the platform. That is the size of transaction we are talking about. We are not talking about some, chota sa POC kar liya. Throughput or AUM right now is almost 4,000 crores. You have access to almost 400 anchors on the platform, and also on the AP, AR management, almost 2,000, right? So the point is, this kind of framework, if it is built in the country, you can actually create a lower credit. So today they are able to provide a lower charge of credit to the customer, MSMEs on both sides. You need to supply to take care of the suppliers. You need to be able to take care of the dealers as well, both sides, and again tier 2, tier 3 as well. It's something which they are able to do it really well. And the impact is, you have seen purchase order financing. Okay, 3 saal pehle, if you would have to ask me what is purchase order financing, I did not know. Okay, despite being in the market for 30 years, I did not know. But it is something which I have learned over a period of time, very important. Invoice factoring. Of course, we know while we are doing this, trades is also scaling up as well. So there's a lot of effects in the market. All products are doing well, and I think ICICI Bank and ICICI Ventures investing in them is also great. Thank you guys. I think you guys are doing rocking job in the market, right? So thank you, thank you, thank you. I think if you look at MSMEs, we talk about 7.62 crore MSMEs. They are all segregated. They are all different. When you look at corporates, all corporates are very standard by nature. You know corporates, they behave similarly. You know have salaried class, you behave similarly. But you have 32 industries, and in each verticals, different people on different side of which side of the power you exist, it's very difficult to figure out. And the critical part is, out of these 7.62 crores, retail credit is more than MSME credit. Retail credit is more than MSME credit, which means consumption credit in the country is more than MSME credit. I don't know which business we are in. The guys who are building are not getting. The guys who are giving jobs are not getting. Somebody who is doing 31% of GDP is not getting equivalent credit. I don't know, the exact data will be less than 10-15%. Nobody is giving credit to us. And another part is when they are giving credit, it is against property, which is not easy, right? So I think markets are changing. Our prediction, and again, open for interpretation, we have picked up obviously the base data from CRIF IMARK saying that there's almost 80 lakh crores of AUM in the market on MSME credit across entities and sole proprietors, out of which anywhere between 3 crores is the approximate amount at which the over 3 lakh crores is the amount of AUM existing in the market. Throughput will be at least 5 to 10x depending on the transaction size and the velocity. And that we believe will become very significant, right? Almost like 21 lakh crores. And that would mean that working capital loans, which is ODCC, will grow slower than these products. Because the fact of the matter is they are done without the risk of the lender is much lower because you have entire understanding of the data, what's happening. But I'll talk through it rather quickly. I think these are the various options which exist today, secured, unsecured, and trade finance. We are double clicking on trade finance because trade finance is something which not many people have worked in. If you are an entrepreneur, you want to get in this business, get into supply chain finance, you will see rocking success. And this framework can be taken to other countries as well, which is what is happening in case of the trades framework also. Same framework, what we have done in India is getting replicated in other countries as well. So at the same point in time, every supply chain frameworks are working well now. I think in terms of what embedded supply chain can do, basically framework is you have an ERP layer, and in ERP layer, truth exists. Truth exists. It is not about statement analysis. Statement is dated. It is historical. It may not have all the understanding. Bureau is dated. It may not have all the understanding, but the ERP is giving you real insights, real data. Can you work across with that? Again, every event on ERP, PO issuance should generate PO financing at that point of time. It can't be that download a PO, go to the bank, give it to the bank. MSMEs don't have that time. They don't have CFOs also. They really can't do it. So we have to do it more on an integration manner. What it takes, we'll talk about. I think both of them are much more skilled than on this area. They will talk about it. I'll quickly move. Key factor is built on top of what the frameworks exist on the ERP and go really, really deep. Every data point is visible in the market, available already in the market. Please use. And it differs because the rates are much lower to MSMEs. And why will anchors allow you to do it, right? One key part is anchors will allow you to do it because they'll get discounts from the both sides. So it's discount which you'll get. So every entity is going to make sense. And for banks, it's going to be a low cost, right? I think what to do about it, the basic framework is when you look around, every time an incident happens in the system, it will trigger a noise. That noise is the MSME now needs credit. And that's the instance you should have underwritten the anchor. You should also take in some limits on the MSMEs. Your onboarding cost will be lesser. Generally, any guesses what is the onboarding cost for one, maybe a simple LAP customer to onboard? What is the typical cost of one loan against property customer, which is the MSME customer to onboard? Any guesses? What is the cost of acquiring one loan against property customer in India? One. So, exact. We're talking, and I've seen more than that also. It takes you 50,000 to 1 lakh. You can get these MSMEs at an operating cost of 200 because you will do some APS for KYC and that's about it because restaurant data is coming from other entities. Somebody is selling your product. Anchor is selling your product to you if you do it really well. Why Anchor is doing it? Because they will have a better reliability on their ecosystem, better reliability on their supply chain. And each point where you're doing invoicing, maybe a PO side or other side when you are supplying, the anchors are supplying to the dealers, at that point of time, the anchor wants to get paid early. And if you can provide credit at the right rate, everybody is happy. So I think this is where a point I want to hand over to Sriram. You guys have built it. You know more than that, more than me. So for sure, over to you.
Hello. Hi. Good afternoon, everybody. Before I start anything, I would like to thank our investors, ICICI Bank, ICICI Ventures. Then we have our board member Amit here, who's driving supply chain finances team, Aditya, Ankit, everybody. We've built this product jointly with them. And it's been a journey of 4-5 years. But what started off as a journey is that, there's a book called Men Are From Mars and Women Are From Venus. And whenever I see this, that's what I remember. Because we used to go to the banks and say, here we do supply chain finance. They say, yeah, fine, we have the software. Always the banking software was running parallel to the commerce. Commerce was running on its own. Banking was running on its own. Hence, you have fraud detection as a big thing. But nobody really ever looked at it as one single flow. Why should a commerce run independent of banking? Why can't banking be a part of commerce? Because banking is all about money. And this specific report really talks about that. At least in context of supply chain, why shouldn't a commerce and banking be together? And that's what we have done with our product here. And some of the numbers speak for themselves. So in essence, we've tried to bring, or we are trying to say, I think men and women both can be from Mars or Venus. It is still okay to be from the same planet. Yeah, that's the thought process behind it. What is the impact of supply chain finance on various products that we have in the market today? If you look at it, the pure financing seems to be a very, very rare commodity in the market. Yes, it's being done by some banks, but it's in a very restricted scale, so it will have a very high impact. Invoice discounting, yes, of course, there are trades platforms, there are various other tools, but the way we are talking about invoice discounting here, again, is going to have a huge impact in terms of the way the financing is being delivered, factoring, and if you look at the downstream supply chain, which is your dealer, distributors, and retailers, how do they get money? That is going to be hugely impacted by the way we are talking about how embedded supply chain finance can work. And the embedded word is something that we've come up with, yes, it's being used. I last saw it in one of their report launches when I think the NPCI ma'am was talking about why don't we have embedded everything. We have embedded finance, we have embedded banking, why can't everything be embedded, correct? So that's what we've achieved with this embedded supply chain finance. Now the finance rails and the lending rails don't run in parallel. Financing is embedded into the workflows of an ERP of a distributor. It's as simple as an Amazon credit card. If I am using a credit card of Amazon or any other credit card, if I'm buying something from Amazon, I can select and say, I will pay this via EMI, or I'll pay this via credit card, or I'll pay this via UPI. It's exactly the same experience we have tried to build into the business flows. And I believe the numbers suggest that we are in the right track, and we have had sufficient amount of success with that. So that's the reason you see impact very large. And from a financial side, how is it going to help them? It's ensuring that the NPS are low. How does it ensure the NPS are low? Even earlier, we were giving loan for supply chain financing. What is so special about it? The special part of it is it's tied to the usage, to the end use, and it's a digital money that's available to be dispersed only on the platform. If I buy something, only then you get credit as a retailer. And when you're buying, the system already knows what is your pattern that you're buying from. How much do you normally buy? Are you overbuying it, or are you using it to subvent some other scheme that the corporate has done? All these intelligence is built into the system before money is disbursed, and that's how it helps. So, yes, we've categorized this into two parts. There's a small business flow that's being put here. Without going into the details, what we've tried to do in the report is try to see, put together a piece where it says how do traditional flows work, how does a traditional supply chain financing work in the industry, and with something like an embedded supply chain finance coming, what are the changes, what kind of impact would it have, right? So this particular thing is about supply chain financing for a distributor or a dealer. If you see traditionally, the distributor would have bought some goods from an anchor. They would either download the invoice, or the anchor would download the invoice, upload it into uploading came after the fintechs came into the picture. Otherwise, it was papers that were being sent to the bankers saying that, this is the invoice against which I need financing. Forget invoice, because a particular transaction could never have been financed earlier. There was no concept. While flow-based lending existed as a concept, it was not possible technically. You had to underwrite a counterparty either fully or no. You cannot finance a single transaction, right? In this case, he would have downloaded an invoice, he or she uploaded into either a bank website, which also, by the way, has a supply chain financing platform already in place, which is from a banking perspective. They would evaluate it, and they would say, okay, fine, you know what, we can lend to this particular distributor. What was the biggest flaw in that? By the time the real commerce would have already happened, and in all probability, the distributor would have bought the goods, sold it, or if it was not sold, he would have returned it as well by the time the lending would come. So there was so much of time lag from the actual event of commerce to the time when the distribution or when the lending has reached the distributor. Even if it was a genuine distributor, he didn't receive the money on time. So that was the challenge in that. What did we do? We've taken the same problem and we said, okay, when you're buying, just like I told, like an Amazon experience, you have an option to say, okay, instead of sending anything from here, the banks are connected to the ecosystem. Do you want digital lending available? Yes, it's available. Just tap it and you can pay directly. And most importantly, it's not only paid there, it also auto settles in an anchor system. Why is it important? Banks never understood why is it important to auto settle in an anchor system. Lot of the anchors have schemes running. We have month-end schemes, year-end schemes, quarter-end schemes, and the schemes are run in their ERPs. So if I need to get a scheme, or if I need to get the goods out of the anchor system, the ERP should say that as a distributor, I paid the money. Otherwise, it never is going to consider it as a, as a scheme or as a money that was paid before the scheme. So that was very important. And that's why you see distributors actually paying it on December 31st, 12 o'clock, 11:30 in the midnight, they do transactions. And that's how they happen in the real business. And all these put together is what we solve as a embedded supply chain finance solution. We ensure that the transaction happens on the time. We've given these details in the report. How does it work? What are the rails on which it runs? Yes, there are ERP rails of the anchor. Then we have a part of our rails which sit in the anchor ERP systems. Then we also have a platform which connects to these rails in the anchor ERP to ensure that the event signals are driven. And then based on various event signals, lending can be provided to either suppliers or dealers or distributors. There is an API framework that we have given from our experience on working with, of course, majorly with ICICI, but with few other financial institutions as well. It is broadly connected or split into 6 parts. The first part is your registration or onboarding piece, where you can register for a finance, which is a one-time activity. Then you have something called as contracting, which again we work with various fintech ecosystem partners to ensure contracting is done. Then the third part is account and credit operation APIs. These are the regular APIs ones, while contracting and onboarding is a one-time activity. Account and credit operation APIs are regular. And then the payment and settlement APIs, this is again whenever a transaction is triggered, these APIs come into picture. Then we have MI statements and settlement and recon part. Now this is the most critical part. If you look at risk, the risk was always after activity. There were never any early warning signs. Even if there were early warning signs, these were again running on rails, which was not driving the commerce. And what we have got to the platform is that your risk is also embedded into the real-time commerce. So if a particular retailer or distributor is supposed to buy 10 crores worth of goods a month, it comes down to 5. You know that there is some event that's going to happen. You may want to probably tighten your tap of utilization. There can be hundreds of activities that can be done, or a call can automatically go to the distributor to say, hey, is everything all right, or is business slowing down? How do you look at it? What's the problem? Why is it not the regular flow that you have, correct? Now, the MIS and settlements and recon, these are all real time. You get real time hook into the commerce that's happening, and that's how you know what's happening there and whether it's a early warning sign or no, correct? And of course, you have, what we have realized was that while we talk about digital banking, API banking, not many financial institutes are still fully digitally ready in an API-based model. I think everybody is on a journey. So we have a offline piece which we support, because initially we realized that everything can be APIs, and we learned it the hard way. Every bank takes about 1 year to integrate, and we've become the guinea pigs for everybody to build their APIs. So we said, let's stop it, correct? If you're not ready with APIs, we have an offline mechanism to do it. When you get to APIs, we are there. We are already there for you. Yes, this is about the APIs. I think the report talks in detail about the type of APIs you may require. We can use this, or we can use it once we release the report. The next part of it, the most important piece is what will determine the scale in the country. So we've thought, what are the struggles we had? The first struggle was understanding the mentality of the bankers, was the first struggle we had. Like I said, it was always running on 2 planes. The second is the anchors, getting the anchors, bankers, and the banking regulators all on one platform, and then signing an agreement to say that, we will do embedded lending seems to be the biggest challenge. So if there is some amount of support from a regulator, that would fast track these kind of things. And most importantly, if there's an alignment of economic incentives which are there. I think there are incentives. It's just that some of these can be aligned to such ecosystems that could help. And most importantly, it's ecosystem. It's not one individual or one organization. So it all depends on the number of participants. And as we see positive traction, we are clear that this can go to the next level. I think we spoke about it, and I would like to thank, I already thanked our investors, the bank which supported us and all that, but I would like to thank all these gentlemen who supported us while making the report. Like Samir said, there was no data at all. While everybody wants to talk about supply chain finance, you will be surprised to, not find any data despite Googling, AIing, or whatever you want to call it. So it took a lot of effort and a lot of interviews to make it. So thank you all for all the support and for taking your time out whenever we called you. Thank you so much. Sorry, his
I think
throat was
I
not
just would
good.
like to, add, sorry, I had lost my voice, so hence I didn't speak. We have a demo session in track 3 in the afternoon, so request all of you to even come and have a look at how this solution works. We also have a pod here where I would invite all of you to come in and have a look at the solution. So this is real here and now. It's not something that we are projecting as a framework. It works, it has been proven, and it is scalable. And would like to participate with all the lenders and the fintechs in the house. Yeah, thank you. Have a nice conference.
Thank you so much. And that's a moment for a picture together. Thanks a lot. Thank you so much.